Dear students, we are currently in the 21st session of Modern Bank Management of third semester Bcom of Mangalore University. Unit number 2nd, unit title Investment Policy and Delivery Channels. The session 21 is all about checks and its features as well as types. As we all know, Indian financial system has a variety of fund transfer methods like plastic cards, mobile applications, electronic fund transfer, etc. But check remains an integral part of fund transfer even today. In this 21st session, we are going to know about the meaning and definition of checks, fundamental features of a check, the various parties to the check, and the different types of checks. Checks, bills of exchange, and promissory notes are different kinds of negotiable instruments widely used in Indian financial system, and they are according to the provisions of Negotiable Instruments Act. Let's know about the meaning of a check. A check is a negotiable instrument containing an unconditional order to the bank for payment of money from a drawer's bank account to the person to whom it is issued, or to the order of the specified person or to the bearer. According to the Negotiable Instruments Act 1881, a check is defined as a bill of exchange drawn on a specified banker and not expressed to be payable otherwise than on demand. Students, if we search for the definition of check in Wikipedia, it defines check as a document that orders a bank to pay a specific amount of money from a person's account to the person in whose name the check has been issued. Students, here we can see a specimen of check. This picture shows us the various parts of a check like bank's name, signature of the drawer, account number, date, payee name, etc. Let's move on to fundamental features of a check. The most important features of a check are: number 1, check must be in writing. A check can be written in pen, or it can be typewritten, printed, or even in a pencil. But as per banking practice, check can be written in pen or it should be typed one. Writing checks in pencils will lead to alterations or modifications, and thus it is not encouraged by banks. The second feature of a check is it must contain an order. Check must contain an order to pay money and not a request to pay money. To express the order for payment, the term order need not be used. The order can be conveyed in the check by writing pay or pay to before the name of the payee. Third feature, it must be an unconditional order. Every check contains an unconditional order issued by the customer to his bank. If there is any conditions, the instrument cannot be considered as a check and it can be dishonored by the bank. The next feature of a check is it must be drawn on specified banker. Check is drawn only against specified bank where the drawer has maintained his account. When checks are issued to the customer, it bears the name and address of the banker, and the check should be drawn on that particular branch of a bank. It also implies that the check should be drawn only on a banker and not on any other person. It is for this reason that an order issued to a government treasury to pay money cannot be treated as a check. So check can be drawn only on a particular bank and not on any customer or agency. Next feature is a check must be drawn by a customer who has deposited money with a bank. That means it is drawn by an account holder. Check should be drawn by a customer who has opened bank account in that bank. A check cannot be drawn by the stranger or a third party. The next essential feature is signature of the drawer. Check should be signed by the drawer with pen. Signature cannot be affixed by rubber stamp or seal. This means the drawer or account holder must sign the check himself. The drawer must sign with a pen or ball pen. One more essential feature of a check is it must be duly dated. Check should be duly dated. The date should be complete in terms of day, month and year. For example, 22nd January 2020. The drawer should mention the valid date on the face of the check. The next feature of a check is payment on demand. Check is payable only against demand of the customer or holder of the check. Such demand for payment shall be made at proper banking hours and branch office where customer has opened account. Unless demand for repayment is made, the banker is not supposed to pay the check. When the check does not contain the time of payment, it is treated as payable on demand. The next feature of a check is it must be an order for the payment of a certain sum of money. The money payable must be certain specified sum and written clearly in words and figures on the check. If the amount is uncertain, it is not valid check and banker need not honor such checks. The last essential feature is a check should be payable to certain person or bearer. The amount of the check must be made payable to certain person or person named in the check, that is payee. A check can be paid to any bearer or holder of the instrument in case of bearer check. After having studied the essential features of a check, let's move on to study the parties to the check. There are 6 main parties to a check. They are: number 1, drawer. A drawer is a person who draws the check, having an account in the bank for making payment of a certain sum of money. So drawer is an account holder. Number 2, drawee. A drawee is the banker on whom the check is drawn. He is referred as the paying banker. Number 3, payee. A payee is the specified person named in the check. He is the beneficiary of the check. If the check is made payable to self, then the drawer himself is the payee. On the other hand, if the check is made payable to some other specified person, then the specified person becomes the payee. Number 4, holder. Holder of the check is the person who is entitled to receive the amount of the check. In the case of an order check, the payee named in the check is the holder. In the case of a bearer check, the bearer or the one who possesses the check is the holder. Fifth, endorser. The payee or holder of a check who endorses the same to another person is the endorser of the check. Sixth is the endorsee. The endorsee is the person to whom a check has been endorsed over by the endorser. So the 6 main parties to the check are drawer or account holder, drawee, the paying banker, payee, holder, endorser, and endorsee. Dear students, here are the different types of check which we use under various circumstances. On the basis of instructions in a check can be classified into various types. Let us know about these types of checks in detail. Number 1, bearer check. When a check contains the word or bearer on the face of the check, it is called bearer check. The bearer check is payable to the person specified therein or to any other person who presents it to the bank for payment. In simple words, a check which is payable to a person whoever bears is called bearer check. A bearer check is negotiable in nature and it can be transferred by simply delivering it. The second type of a check is order check. An order check is one that is payable to a particular person or to his order. The payee can transfer the check to someone else by signing on the back side of the check. In this type of check, the printed word bearer is cancelled. If the word bearer has been cancelled on the check, it is understood that this is an order check. So we can say that an order check is a check which is payable to a certain person or to his order. The third is open check. A check which has not been crossed is called an open check. This type of check is payable across the counter of the bank to the person presenting it. But an open check may result in fraud by dishonest persons and it may cause loss either to the customer or to the banker. In order to minimize such risk and to protect the customers, the bank and the true owner of the check system, the system of crossing the check has been introduced. So crossing the check protects the customer and banker as well. Next is a cross check. A check which carries two parallel lines at the top left corner of the check with or without the words and company or not negotiable or account payee between the parallel lines. Crossing can be written or stamped. This makes sure that irrespective of the person who presents the check to the bank, the transaction is made into the account of the person named in the check. So, a cross check protects banker as well as customer from frauds. Next is post-dated check. A check bearing a later date than one on which it is actually issued is called a post-dated check. Such checks are payable only on or after the particular date mentioned in the check is arrived. For example, if a check presented on 10th January 2020 bears a date of 25th January 2020. It is a post-dated check. The bank will make payment only on or after 25th January 2020. The next is a blank check. A check on which the drawer signs and leaves all other entries blank is called a blank check. Next is stale check. When the validity of a check is already expired, it is called a stale check. The maximum time for presenting a check for payment from the date of drawing is only 3 months. Now it has been extended up to 6 months. So after the lapse of this time, the check becomes stale check. A stale check is not honored by any bank. In India, the RBI fixes validity period of check under Section 35A of the Banking Regulation Act, and this validity period can be changed by RBI when the situation of the economy warrants. With effect from April 2012, RBI has reduced the validity period of the checks from 6 months to 3 months from the date of issue of the check. The next is mutilated check. If a check is torn into 2 or more pieces, such a check is known as mutilated check. Such a check is usually not accepted by any bank. In some special circumstances, after confirmation from the payer, the money may be credited to the payee's account, and such decision is left at the discretion of the bank. Next is gift check. They are issued to both customers as well as non-customers. The gift checks are intended to be given as presentation to others on occasions like weddings, birthday, and such other functions. The gift checks issued by a bank are encashable at any of the branches of the issuing bank at any time. The next type of check is a traveler's check. Traveler's checks are issued by banks. A traveler can avail traveler's checks issued by the bankers against the money deposited. He can use such checks to withdraw money while traveling. It is as good as carrying cash, but he can travel safely without carrying huge cash. Traveler's checks are available almost everywhere and they come in various denominations. There is no expiry date for traveler's checks. Next is a self-check. If the account holder, instead of writing the name, writes self to receive money from the branch where he holds the account, such a check is called as a self-check. The next is antedated check. An antedated check is one which is issued for a back date, that is, a date which is prior from the date of issue of the check. Such a check is valid for 6 months from the date of issue of the check. In simple words, a check bearing a date prior to actual date of signing the check is called antedated check. And the last type of check that we are going to study in this session is pay yourself check. These are the checks asking the bank to deduct money from his account into the bank's own account. They are issued for the purchase of demand draft, pay orders, fixed deposit account, etc. So these checks ask the bank to deduct money from his account into the bank's account. Dear students, in this session, we have discussed the meaning, definition, features, types, and parties to the check. That's all for today's session. Thank you.